Time to say a very good morning to Jason Dwyer, Managing Director of station sponsor Dwyer Property Investments. Now, Jason, the Dwyer name is pretty well known right here on the coast, and it's been around for a good 35 years?
Yes, 35 years. I grew up here and have been involved in the local property market most of my life. My brother Wayne Dwyer is also well established in property. He owns one of the coast's most trusted building companies, Dwyer Quality Homes.
And I think it's fair to say a lot of people have been thinking about their financial future, especially during these difficult times.
Yeah, it's understandable that people are nervous about where all this will end up and whether they have enough to comfortably live on during their retirement years. Official figures show that only 4% of Australians retire financially independent with an income of more than $30,000 a year. When your regular full-time wage stops coming in, you realise that $30,000 is a fairly modest amount.
Okay, but won't they have super to rely on?
The harsh reality is that superannuation performance and balances are much lower than expected because of COVID-19. If you're within 10 years of retirement, you'll be substantially impacted, especially if you access your super early.
And how about personal savings accounts?
Well, cash in the bank is actually going backwards. Savings are earning less than 1% interest now. Property, on the other hand, is getting guaranteed rental return of 5%. Add capital growth potential and your nest egg will grow instead of dwindling away. I've seen a surge in interest from people whose super and retirement plans have been really affected by the pandemic. They're looking at property to shore up their future.
Okay, so can you give us a figure, Jason? How many investment properties would folks need to self-fund their retirement?
Well, it's a good question, and it depends really on how much you need or want to live on. Based on healthy 5% return, 2 properties, owned outright, would give you an income of $50,000 a year. 4 properties, $100,000, and so on. It's a vastly better retirement compared to the age pension or average superannuation.
Certainly would, Jason. And if you want to know more about how to set yourself up for retirement by investing in property, visit the Dwyer Property Investments YouTube channel, or you can call Jason Dwyer for an obligation-free quote today. Thanks, Jason.